Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for somewhat weaker start, tracking Asian peers. Talk about GIFT Nifty, signals a flat opening coming in for Indian equities. Wall Street closed flat on Friday. Overall, the indices have lost around 2 to 3% last week. Now, Asian peers stutter as China doles out mega rate cut. It's cut in 1 year prime lending rates but leaves 5-year rate unchanged. Talk about FIIs. They've sold shares to an extent of 267 odd crore and DIIs have purchased shares to an extent of 340 odd crore. Now, stocks with highest delivery interest, that includes the names of Alchem, JK Cement, Container Corp, Ultratech Cement and Torrent Pharma, along with some of the names that have seen the highest delivery interest out there. Let's talk about the FNOQs, FII data in terms of index futures, net buyers for index futures, and also there have been the net buyers for both Bank Nifty options and Bank Nifty futures out there. For the index futures, they've bought an aggregating amount to around 1,071 crore out there. There've been sellers in stock futures. They've also been sellers in index options overall. Now let's understand stocks that are currently in the ban. Chambal Fertilizer, Delta Corp, India Bull Housing Finance, Z Limited, Granules, Hindustan Copper and SAIL are some among them. What is new in the ban is Manappuram Finance. Of course, there's also news which is coming in terms of the family settlement, but no activity per se. Heightened activity can be witnessed because it's just entered into the FNO category. The moment it steps out, right now the open interest is way above that 80% levels out there, and it's going to take a while for the counter to make it out of the ban list out there. Let's talk about the PCR ratio. Now, PCR ratio is to an extent of 0.98 versus 0.6 for that matter. But let's discuss more stocks and strategies today with Prashant Sawant out there, who's going to take us through about the strategies and views on Jio Finance listing, which of course is going to be the moot point for discussion here on. Prashant, good morning. Trade setup, you expect a weak start and a day to be a little more range bound, just the trend that we've seen thus far in the last week. What are you suggesting right now to the viewers in terms of the levels and the strategies that they can take here on?
So, Nickey, good morning and good morning to all the viewers. When we met on last Monday, I said that for Nifty futures, I'm looking at levels around 19,250 and that would be a major make or break level. So, I think the low that we made last week was 19,270 odd. So, 30-40 points below that, 19,240, 250 happens to be a major level on closing basis. If we close below that, we may nosedive another 200 points and see levels around 19,050, 19,100. So for me, considering today's event, today and tomorrow, 19,250 Nifty futures on closing basis happens to be very important. And on the upside, 19,400 happens to be a big resistance as well. As far as Bank Nifty is concerned, I think 44,250 futures is a resistance and 43,500 happens to be a support. It is in a tight range.
All right, Prashant, hang on to the thought. We're going to get back to you after addressing the markets open out there. Nifty 50, we are looking at a flat start coming in for the markets. It's around that 19,300 mark, well below the 19,350 level. Remains to be seen if we can go back to that level that we've seen. It's somewhat a flat start, but with a positive bias. Let's talk about the Bank Nifty index along with the small cap and the mid cap indices per se, just to see where the traction is moving right now. Well, for Bank Nifty, we're seeing gains to an extent of 0.25% out there. For mid cap and small cap, we're seeing gains to an extent of 0.2% out there. Let's talk about small cap. That's the one where the outperformance is clearly coming in from. We're seeing gains to an extent of more than 0.5% out there. Let's talk about the other sectoral indices that we have in the chart right now, just to see where the momentum is building up. And IT shares there, we're seeing some amount of traction on those ones. We're seeing gains to an extent of 0.5%. Along with metal index, which too has garnered some traction in early deals, sitting with gains to an extent of 0.75% out there. Let's talk about the auto basket. Well, a bit of profit booking creeping in early deals. Along with that, let's look at other sectoral indices. Pharma, well, the defensive pack right now is doing well in the range-bound session of trade, and FMCG also is doing pretty decently. Well, at least not profit booking. It's holding on to some amount of gains. Consumption story, well, flat start with positive bias out there, and infra is acting no different. Let's talk about the top gainers and the top losers that we have on the index before we address in the stocks and strategies that you need to keep on your mind right now. A couple of them: Adani Enterprises, Adani Ports, and Hindalco. These are essentially the top gainers that we have on the list. GSW Steel, Power Grid, and Tata Steel. So the metal counters along with Adani group of companies seem to be doing extremely well in trade today. And let's look at NTPC, UPL, and Tata Consumer Products too, just to see how that is moving. Let's talk about the top losers that we have on the list. M&M, Eicher Motors, and Reliance. These are some of the top losers that we have overall on the index. ONGC, Bajaj Auto, and HUL. These are some of the top losers that we have overall on the list right now. But let's first talk about Jio Financial Services. That's essentially a counter that I'd want to talk about in detail. Of course, it's going to be listing in. We need to see what price do we look at, given the kind of traction that we have witnessed thus far in the entire group per se. And there are a couple of highlights that I'd like to highlight out here. The first one is, the highlight is, of course, it's going to be debuting in today, but there are 5 important parameters that needs to be addressed here on. First, it's going to be a trade. It's going to be, of course, listing on the bourses on August 21st, which is today. It's going to be making in the debut out there. It's the entity demerged from Reliance Industries last month. And if you talk about the other developments that we have, JFS will continue to remain in the indices of FTSE Russell. Along with that, MSCI 2 Global Standard Index, that will be one stock which will be added in within this space. Now, this will come into effect from August 23rd, essentially the time when the stock will move out of the benchmark index, that is Sensex and Nifty. So do keep an eye out on this one. It was trading as a dummy ticker, and the price discovery was 261. Grey market premium makes the listing comes to a level of around 310 or 315 for that matter. Needs to be seen how this one plays out. But the shares of Jio Financial, of course, were credited to the demat account of shareholders last week, where for one Reliance share, you had one Jio Financial Services share. Now, a couple of highlights out there that I'd want to point out for this one. It is a trade-to-trade segment, which means, and this is going to be for a period of 10 days, which means it's not going to be essentially being traded as an F&O stock, but the one which is in delivery at least for 10 days. Market capitalization, it's the second largest NBFC, sitting with a market capitalization of more than 1.5 lakh crore out there. And let's talk about the treasury stock holding. Jio Financial holds a 6.1% stake overall in the company, and that's the way, if you talk about the net worth with the RIL, that is a 6% stake in it, it stands to an extent of around 28,000 crore, and without that, it stands to an extent of 14,000 odd crore. Like I suggested, that this particular adjustment, the way it works, it will enter an MSCI after 3 days of listing, and it will check out of the benchmark indices, Nifty and Sensex, after 3 days of listing. Essentially, what does this mean? It means that any funds, passive funds, which are holding this particular Nifty 50 index will probably see that churn happening, because they are only supposed to be invested in Nifty 50, and by virtue of that, you will see some sell-off coming in from these investors out there. So expect some amount of adjustment, or let's just say correction, to take place after 3 days. Right now, we're looking at some amount of gains coming in for this counter, given the kind of emission, given the kind of market capitalization that the company has laid out thus far. So this is essentially what we wanted to talk about Jio Financial. Let's also address in other stocks and news, Titan, Vodafone and Tanla platforms along with Route Mobile. Now, a couple of developments there also where, we're seeing a negative development taking place essentially for Tanla Solutions and a bit of positive coming in for Route Mobile out there, where there is a renewal which has taken place for, in terms of Vodafone Idea out there. But let's also address in Titan, where, the company is going to be acquiring in an additional 27% stake in CaratLane for a sum of around 4,021 odd crore. Now, the company already holds in 71% stake, and the transaction will take the stake in CaratLane to an extent of 98.28% on fully diluted basis. Now, the deal has valued this company at a consideration of around 17,000 odd crore. Titan first bought stake in CaratLane in 2016, and that was to an extent of 62%, which was bought in for 357 odd crore. So you can only see the premium that it's paying right now. And so far, cumulative investment in this one is to an extent of 400 to 450 odd crore. Typically, what Titan gets from this, greater stake in a fast growing business. If you talk about CaratLane, FY21 to FY23 revenue CAGR, it's at 73%. The studded share contributes to 75%. CaratLane sale have strong online presence and stores, physical stores too, across the country. Like I suggested, now Vodafone Idea has not renewed its deal with Tanla platform. The term of the contract expires in November 2023, post to which there was no renewal which came in. This would have a revenue impact to an extent of 17 odd crore, and the PAT too, the bottom line, is expected to be affected by as much as 9 crore on full quarter basis. But however, Vodafone Idea has given this contract to Route Mobile now for the period of 2 years. Along with that, it says that this is one of the largest exclusive deals coming in for Route Mobile's history. So that's the one. Vodafone Idea right now is doing well, along with Titan too. If we can pull that up just to see how the development has essentially stacked up, it is a positive start. Well, let's get back to Prashant out there and check with him as to what does he make out of the entire adjustments which have taken place right now, and what does he make out of Reliance and Jio Financial Services. Please go ahead, Prashant.
So I think, Nickey, with regards to this space, I'll definitely wait. But as an investor, I would be always keen on adding on every levels just because of the name and the reputation it carries, as well as the market cap that it is launching with. So if I'm an investor, I would not worry much about the price. If I'm a trader, I would definitely wait for a couple of days for the price to settle down, for the euphoria to calm down, and then I would look for entry levels. I think if I get it anywhere around the range that it was trading, 265, 270, that would be a good price to get in. But overall, I feel it's better to have a trade for 2 days, see the closing for 2 days, and then take a decision.
All right, Prashant, we are just going to leave it at that. Thank you so much for taking out the time and speaking to us like always. All right, it's that time of the show where we address the fundamental side of the story. Clearly, the trade has been range-bound thus far for the last couple of days. But how will the trend stack up? How is the FII activity pointing to some amount of correction, probably creeping into the markets? How the Q2 earnings have stacked up? Let's bring in Dipan Mehta, Director, Elixir Equities out there. Dipan, good morning. Mr. Mehta?
Yeah, good morning. I can hear you. Good morning, and thank you for having me on your show.
Pleasure is all ours. I'm going to start off by asking you about your assessment of what we're witnessing in terms of a very aerial view for markets before we get on to specifics, where we're seeing some amount of probably correction, and there is this entire theme which is playing out where most of the market participants are now suggesting a buy on dips strategy and probably looking for that one correction point where they could lap up equities with attractive return potential out there. But how is the trend shaping up for you? Which are the pockets that you're looking at?
Yeah, I think that the market has entered a new phase in this multi-year bull market, which we've been witnessing. And sure, corrections will be there from time to time, but waiting for a correction is futile because even at these levels, we do feel that there are adequate opportunities if the investor is prepared to play the long-term waiting game over here. I know that valuations are slightly on the higher side, but when you account for the kind of growth which can be expected from the Indian economy and these companies over the next 2-3 years, then you can certainly build in at least a 15% type of a return on the index and maybe slightly higher on your portfolio as well. And if you look around you as well, I think that there are many sectors which are in a very good momentum, which are seeing a cyclical upswing. And this last 2-3 earnings season has also been exceptionally good. So we're very positive on the market, and I think best of luck to investors who are waiting for a correction. Usually it doesn't really happen. And, we've already seen a minor correction, but I don't see the markets correcting much further from these levels.
Okay, that's quite a bullish view coming in. But what do you make out of the entire Q2 earnings season thus far? I mean, what is the trend that you're picking up? And for the June quarter too, for the earnings that took place, what sense does it make to you, and the pockets that you think were more attractive? There is a bit of caution which has crept in already for the banking stocks right now, where the NIM's compression has started happening and the disbursement growth is probably higher in for NBFCs. But within the financial space, what do you like?
So I think if you look at the entire spectrum of industries, with the exception of large cap software companies, maybe commodities, by and large, I think all sectors have done really well. And even deeply cyclical sectors like real estate have turned around and are now contributing to the earnings growth of the industry as a whole. So apart from, I think, a few select industries, more or less, we are seeing good growth momentum. And there could be a softness here and there, as we saw perhaps in retail or in consumption-oriented stocks, especially those focused on rural areas. But by and large, I think the Indian economy, the underlying fundamentals, reasonable rates of interest are all driving corporate profits. Coming specifically to the banking sector, I know that there are concerns of some pressure on the net interest margins, but then the volume of credit growth also is pretty decent for the banking industry. And so far, the NPA cycle has remained very positive and steadfast, and those costs are reducing drastically for the industry as a whole. So I think if they just manage the balance sheet well and focus on raising deposits, then I think the banking industry also has a lot of appreciation to offer from these levels. And amongst all these sectors, I think there's reasonable valuation over there if you consider the kind of earnings visibility which is there for the next 3-4 years.
All right, what do you make out of the recent run-up that we've seen overall in the pharma space? Do you see a further traction to these? How are the valuations stacking up for you at this point?
See, that's another brilliant example of a sector which was underperforming, and we saw it starting to do really well in the June quarter. And it's just taken some amount of price stability in the US generics market and less adverse news flow on the inspection of FDA inspection on various plants. And we have seen a super performance coming from the pharma stocks. I think we are seeing a cyclical upswing within the pharma space. Mind you, pharma, especially pharma exports, become more and more commoditized. But the thing about commoditization is that they also have their highs and stability in prices, and the companies are able to reap those benefits, which is what is happening at this point of time. This trend can easily continue for a couple of quarters or more or so. But from a longer-term investor's perspective, we like to focus on companies which are domestic-oriented, the likes of Mankind Pharma, JB Chemicals, Eris Life Sciences. And also, I think existing Indian companies are also trying to focus more on the domestic market, on brands, and trying to grow the volumes over here. Because the Indian healthcare industry offers a great deal of potential, given rising spends on medicines and on healthcare itself. So we're very positive on the pharma sector, but just need to be a bit selective over there.
All right. Also, I'd want to understand, since you spoke about the domestic part of it, do you expect domestic cyclicals to report strong earning growth in the coming quarters too, just the trend that we saw playing out for the past couple of quarters?
Yeah, absolutely. I think if you refer to the industrials, I think we are seeing a nice upcycle in the capex spending, and that's benefiting a whole host of electrical and electronic capital goods manufacturers, the likes of ABB, Siemens, Thermax, Praj Industries. I think the list goes on and on. And these companies are sitting on exceptionally good order book position. And then there are the engineering construction companies, which are in the midst of executing large infra projects, road construction companies. I think those also are doing phenomenally well. They're sitting on average of 3 to 4 years type of order book position as compared to their revenues. And also margins for the entire sector, the industrials and the capital goods segment have been improving because of better operating leverages, stability in raw material prices as well. So I think that there are good opportunities over there in this sector as well. And larger companies like, say, Larsen and Toubro should do exceptionally well given the order book position, the disclosure we and our clients are invested. And we are quite focused on some of these specialized engineering companies as well. Again, the disclosure companies like Praj Industries, VA Tech, Wabag also, ISJEC Engineering also comes to mind. I think you could see the numbers all have been quite phenomenal. So there are many opportunities in the engineering construction field, as well as companies which are engaged in capital goods equipment manufacture.
All right. Also, I'd want to check with you as to what do you really make out of this entire Jio Financial listing out there, because the pre-opening rate is suggesting a rate of around 280 or thereabouts. It's just re-merged last month. And what do you make out of it for Jio Financial Services, T2T segment, so not an F&O category? After 3 days, it's going to be excluded out of Nifty and Sensex. But of course, it's also the second largest NBFC that we are seeing at play. What do you make out of it?
I think it's a historical moment. We are seeing the birth of or the listing of one of India's what will be one of India's largest financial services company. We know the ambition of the Reliance Group and their capability to execute, and all of those will be visible in Jio Financial as it scales up its operations as well. It has an extremely strong balance sheet, and the timing also is fantastic. I think we are seeing greater and greater demand for financial services, for retail loan products, and certainly Jio Financial will build on the platforms which have been created by the Reliance Group to expand its operations. So we're very positive on this particular development. Pricing, I think, is slightly on the higher side, but that's to be expected because of the potential and the I would say, track record of the promoters. But I think at corrections, it would make sense to buy Jio Financial. And certainly, I think all investors and traders will have it on their watch list at all points of time and see what progress is being made, because a lot of positive news flow can be expected from this company. And I'm pretty confident that if you have a 2-3 year type of a view, even at these levels, I think it settles down around 280 or so. Even at these levels, it could give a reasonable rate of return. But all I would like to caution over here is that it's a new company, and in the lending space, it is easy to scale up and start to show profits. But the true test of a well-managed NBFC is when the chips are down and it is crunch time, and how they manage the collections. I think that was what determines the quality of the management and what they're able to bring in terms of value to its minority shareholders. So we haven't seen that in Jio Financial. It has fortunately not gone through any crisis period like what we saw the ILFS or earlier NPA crisis, which impacted a lot of the PSU banks and NBFCs. So maybe let's see how it actually does when the NPA cycle is turning around. But apart from that, I think next 3-4 years looks exceptionally good for Jio Financial.
All right, Mr. Mehta, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, what I'd also like to add in is the fact that Jio Financial Services has already announced in a tie-up with BlackRock, which is the world's largest asset manager, to float a mutual fund company. Together, the partnership will introduce a new player to India with the market targeting initial investment of $3 million. But with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
The bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.